I'm losing my
with US dollar. Have you been doing any, you started largely in stocks, in stock options, stuff like that. Do you look at currencies? Have you traded them in the past? And have you done anything in the recent run up in US dollars?
The only currency that I'm trading is dollars. It's the only one I probably pay attention to most day in and day out. Okay. Every now and again, I'll pay attention to the euro. What's going on with that? I noticed more recently it's trending down towards 1.14, which we're going to show in a little bit. But I've never traded them. I've never traded any currencies.
Wow.
I messed around with a paper trading account with currencies before, and I blew out so bad. So bad. I didn't know what I was doing.
That's the worst. Is the worst thing you could have said. John, can we actually cut this and do it again? Because he just literally. I paper traded currencies once. I blew out. Never went back.
No, well, I should clarify the reason why. I mean, first of all, I was trading really large size. I had no idea what I was doing. One of the things that I learned that actually a guy that when I first started trading options, and we actually had fake accounts when we were beginning to trade paper accounts. And he used to say, and this was his theory, trade big in those paper accounts so you can understand the moves and exactly why you're making or losing money. And so I brought that whole same thing to a paper trading account again, and just trading really big. I was looking at it from a standpoint of math of like, okay, well, if, they're crosses, right? So if you're trading euro dollars and dollars are going down, that means the euro overall might generally have a chance to move up, right? So that's kind of the thought process. But they can be a little complicated in that fiscal policy always is the main thing that makes them move, right? And that's where it can be a little challenging at times.
We're gonna get into all of that. Yeah, I love that you tell that story. That's really great for, I'm sure, everybody to hear, because it does hit on the complexity and the large size. Like, some of these currency products are some of the biggest products out there in the future space, and now that's because they have some of the lowest volatility in all of the asset class, a lot lower than stocks, a lot lower than commodities like gold and crude oil. Currencies have lower volatility, but the products thusly are very large, and they can get out of hand when you start to see some movement like we have been seeing. We're going to remedy both of those things. We're going to give you a simpler trade here today and a smaller trade, because we are the small exchange. And you did it right, which is to say that the first place you want to start usually is just with the US dollar here. And part of the reason for that is if you start with yen or euro or these other markets, they're usually cross markets. They're single markets there. With the US dollar at the small exchange here, you've got a US dollar market that is against, I think that's seven different currencies here. So it's really just taking this ubiquitous US dollar that's obviously well known in North America, but also across the globe, and make a decision on where you think this major currency is going to go against a basket here. Now, something that Jermal learned the hard way, but I guess not that hard because it was a paper account, it's a paper hard way, I guess. But what you learned is that these markets move one for one with each other. Like, there is no, US dollars just rallied a percentage point, I'm going to get short euros because they're going to fall. They move, it's in tandem. Every time US dollars rally a couple of ticks, it is at the expense simultaneously of the euro and these other markets here. So when you buy USD, Jermal, you are short Mexican peso, Australian dollar, Canadian dollar, British pound, Japanese yen, Chinese renminbi, and euro, and vice versa if you're short US dollar. Making sense?
Making sense. Yeah, I like the way you have it laid out, and it's true. I mean, that's probably one of this is definitely the first place to start, understanding, like you just said, if you are short dollar, then you're getting long these other ones in effect.
It's one of the easiest ways to get started in currency trading. And here you can start to visualize that concept I was just speaking to, that inverse movement, that, of course, the dollar can rise and fall and euro fall and rise simultaneously because of stuff that's happening with the US economy or stuff that's happening with the Eurozone economy. Of course, that movement can come from one side or the other. but it happened simultaneously. I mean, there's no hitches here when we talk about correlations and, pairs trading. A lot of times, Jermal, it's always like, oh, I can see the relationship, but these breaks in the relationship, that's where the opportunity is, and that's where we get in. There is really no pairs trade when it comes to, oh, if I buy US dollars and I'm short euros, pounds, yen, and all these things, well, then I can just buy all of those things. And it's like, well, now you have no trade on, because it's, as you can see, it's almost a mirror image, and it's an exact inverse.
Yeah. No, absolutely. And I think understanding the idea of the cross, understanding that's why I like to look at it from that kind of math perspective, right? Like just the denominator, right? Like, I think it makes it easier for those who are just getting started. What do you think?
Absolutely. I mean,
full of water. Sorry.
I'm very parched here today. I actually just had a beautiful Beyond Burger that my coworker grilled outside. Can you believe that? Charcoal grill going on the side of the small exchange. Our chief regulatory officer is grilling up the burgers. It's craziness.
Beyond Burgers over there. You're so pretentious. I don't even know what that word means. I just heard our mutual friend Lindsay use it earlier. I told her I was going to. I do know what it means, of course, but I just wanted to say that.
How does plant-based burgers insinuate pretentiousness?
The fact that you don't even know, it proves my point. See what I mean? That's what I'm talking about.
Good.
In these times of high inflation, you're the only one buying Beyond. No, I'm just kidding.
But no, you're exactly. And it's funny because US dollar does factor in to every market. But another way that we think of that denominator effect that you're speaking to, Jermal, is with commodities, right? Like every time crude oil, if you're trading crude oil priced in USD, when that market rallies, you usually see inverse action in US dollar. Crude oil rallying, US dollar moving lower. And what was interesting is actually the crude oil run-up of a month ago or so happened with US dollars rising. And that was kind of an outlier event. And we actually got short both US dollar and crude oil. But you're exactly right that think about these things in that denominator fashion, whereby they're the same organism and thus they're moving together here. And you can see it even more fleshed out when I start to, and I didn't even put a legend here, but in white, you have the US dollar. In those other crazy colors, you have euro, yen, and pound. And you can see that it's a varied effect here. But the basket of foreign currencies, obviously on the year trending lower, as the US dollar trending higher. And so you can see that idea okay, so if I bought US dollars, I'm up on the year. And that is either a function of that white line being higher, or I was short all of those other colorful lines and those are lower, and vice versa. Selling that US dollar is like buying a basket of foreign currencies.
Yeah. And it's it kind of, you kind of touched on it earlier. This speaks to the fact of how, I guess you could say, strong the economy has been for the U.S. versus some of these other ones, some of which are emerging market currencies, right? I mean, I forgot all the ones we have in here, but a lot of those are other emerging market currencies. And so kind of
absolutely. A lot of that stuff factors into this. Yeah, you've got euro, pound, and yen are kind of, they're considered, the developed nation currencies there. And they're kind of grouped in together, Eurozone, Great Britain, and Japan. And then the emerging markets there, we have that Chinese renminbi and the Australian dollar and the Canadian dollar there, and also the Mexican peso. Those kind of moved their own side of it's kind of like, and actually this is great, this is pretty organic here. It's kind of like the stock market, right? Where you've got your technology stocks, those growth stocks, the emerging markets that could see a lot of upside, but could also see a lot of downside. They're very volatile. And then you've got, maybe like your financials and your consumer staples, and those that they can, really start to move, and they can move in a big way to the upside or downside, but they're usually less volatile. That being said, that euro, like you spoke to, at lows on the year below 114, huge move in that kind of developed currency there. But at the end of the day, I like that we started this segment this way and we're kind of concluding it this way, starting with a product like SFX futures, which right now a margin under $200. That lets you know how small and how, this market is only going to fluctuate in your account $50, $100 maybe on a daily basis. And the fact that it's US dollar against that 7 currency basket, a pretty good place to get started and a pretty good place that you could get comfortable in, right, Jamal?
Yeah, absolutely. And it's trading around right now. I mean, we've seen dollar on the move more recently, just breached 150 earlier today. Small dollar did. So it's been a ride more recently.
And absolutely. But yeah, if we're feeling good about the educational aspect of here, I think that we can bring up the trading platform and actually take a look at exactly what my friend is speaking to. Yeah, broke 150 this morning. This is a level that SFX futures, the US dollar, has not been to here in 2021, and we're almost closing out the year. What say you? I know, so Jamal and I are a great yin and yang for this program because I'm very, you have a fair amount of math and statistics in your background, but I'm almost to a fault. What are the numbers on this? And that's how I'm going to trade it. What is your kind of more macro view of this? What are you thinking about dollars here in November of 2021?
Well, so I'll just preface it by saying I'm short, and I like the idea of being short here. I find it interesting that the dollar is making this move, given the idea of inflationary environment, but also I think the dollar is continuing to move up because the markets. I think people are anticipating on some type of pullback in the markets. So take that for what it is, but I think the idea of getting short here is interesting, and I am short.
Absolutely, I would agree with you here, especially given the statistical background here. And so this is a 15-minute chart. This is the ride that we've seen in the last couple of days here as we got back to the recent highs were right around 148 to 149, and they got up there. They kind of stagnated, and then yesterday and today is really the punch higher in US dollar that I look to get short. Now I'll add a little bit more data here so you can see exactly what I'm speaking to. Go year to date.
November 10th was the inflation number that we got, right? I think that was the day, right? Where we got the big move.
Yeah, this big rally here on the 10th. We got up to those highs, and then, like I say, we kind of sat around here. And whenever we get to a price extreme that we've been to for the second or third time, I tend to be like, all right, show me something here. Like give me a big punch here. Don't just sit around, because then this starts to feel stale. If I'm short right here at 149, it feels a little stale. So they're giving you that punch through those highs, and you can see year to date got up to 148, came off significantly down to 143, got up to 148, did some dancing around here, 146, 145, nice move lower. Similar vibe that we're in right now. Now, of course, this US dollar can continue to rally. And actually, for context, I'll show you what has been the biggest mover. And the biggest mover here again today is this euro not even taking a breather at 114, getting absolutely smoked, getting close to 113 here. IV finally getting a little bit higher. But what's really tough to play this with options, you're getting single digit IV over here, which is normal for this market. But if you're punching through the lows in euro and I'm going to sell some options, I'm looking for at least 9, 10, or 11% in this implied volatility. So I'm going to stay with the outright market. And actually, since it is roll week here at Small Exchange, I'm going to go over to the SFX Z21 futures. And these are just above 150 here. I'm going to look for a short trade like Jamal has put on here today. $170.
$170. That's pretty cheap, man. Comparatively.
Yeah, absolutely.
What's so you were looking at euro vol there. What is fair vol in euro? I mean, if there's a thing.
Sure. Yeah. It is like the average in the same way that, like, what would you say is the average VIX value?
19.
So
that's across time, right?
Sure. That value for euro for like the last several years is like 6-7 right in here. And so that's why I don't really feel like I'm getting an edge, even though IV rank is telling me, you do have an edge here. It's been a pretty slow last 365 days for euro options. And so I'm looking for 8, 9, 10% in IV to get something that is, like, to your point, above fair value, so I can get some kind of edge when I'm selling the options.
Yeah, I mean, like, while I say like average VIX is like 19, I would say fair is like 15 and a half, you know what I
Sure.
mean?
Yeah, we're dancing right. I mean, there's stuff you can do here. It's just, yeah, I don't like going to, the market has fallen 100 points in the last 24 hours ish. And to still get some premium, you're only like 100, 200, 300 points away with 52 days to go. It's like, man, we could get down there in the next week or so, and I'll get tagged. I'm not loving the options piece there, just going straight to the short futures in the SFX Z21. And yeah, this is one, Jermal, I'm interested to see what you think, but my management style up here in this price extreme is probably looking for just like $1 or so. If I pull up the continuous contract, every time we've punched through these highs, maybe not to start the year, this was a big move. I don't think you can expect several dollars here, but every time we've punched through those highs, we've given back, $1, $2, $3. I think that's a nice mixture of what's reasonable and what's something that I can get in the next 2, 3, 5 days of trading. What are you looking, if you're selling these 150s in the Z21s, what are you looking for?
Yeah, I'm looking for like $1 around in either direction, honestly. Even if I'm losing, that take it off, if it goes up to the upside, and $1 to the downside. And I think too, we should mention, like, a lot of the big moves, like you highlighted, those are usually around like either a Fed meeting or some inflation number, honestly. So, if it were there, that's more of an earnings event, and then you could look for, you could be wider around. But I think right now, with no real news, $1.
It is actually a pretty nice spot with that in mind to get your hands a little bit dirty with the dollar, because yeah, you're right. We just had an FOMC, just had some, inflationary data. We don't have a non-farm coming up for another 3 or 4 weeks. We don't have an FOMC for at least another month. And this should just be pure price action. And with this extreme in mind, hoping for the market to come back $1. If it does get back up to, or not back up to, if it gets to a new territory of 151, I guess we shot the wrong shot here, and we'll take the L on that and move on. But I must move on here, Jermal, to Splash into Futures, which is coming up next. Any last words? What's going on? You're over at the Tasty Trade office, right?
I'm over at the Tasty Trade office, chilling out, man. I guess I, could have changed my background, but it's all good. I mean, yeah, hanging out with the people,
Absolutely. Yeah, I saw Tom yesterday. He looks very tan. He was, I think he just got back from like Palm Springs or something. He's looking very healthy. Is he in the office there today?
You checking out his new community? Where is he eventually going to stay? Is that what he's doing?
Is that what hey, your words, not mine. I didn't insinuate any kind of pretentiousness about age.
Oh, man, I got a rib Tom. Nobody else does it, man. It's only me and Tony. So, I just like give him rib shots.
That's
he gives me rib shots too. He's still
absolutely
making
true.
My mom's here.
Oh yeah, he'll definitely dish it out. Now, if you are so bold to give it back to him, that's the true tell of someone who is strong. We love having you on here, Jermal. Thanks so much for joining the Small Stakes program every Tuesday, and also running his own show at 2 p.m. Is it Central Time?
It's 1:30, but thanks. I know you don't watch now. That's fine.
What a jerk.
It's 1:30 Central Time. That's fine. I'm a jerk. You're pretentious, and you know what?
No. I'm the jerk, and I'm pretentious here. Of course, you got to go check that out. 1:30 p.m. Central Time. Get even more Jermal Chandler. He is a rising star here on the network. He's fantastic, and now he's short U.S. dollars like the rest of us. Thanks so much, my friend. Thanks everybody for watching Splash into Futures. Coming up next, peace.